Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, July 28th, 2021, and I'm pre-recording this Trading Places Live for Thursday, July 29th. Futures currently in the red this evening after a couple of earnings reports were out and companies reacted negatively. We'll go through those earnings in just a bit. But it does look like the NASDAQ might get off to a rougher start on Thursday than the other indices. Of course, anything can happen overnight. And so we'll just kind of wait and see how we open. But at least at this point, it does look like the NASDAQ may get off to a little bit of a shaky start with NASDAQ futures down about 60. Futures are lower on the S&P and Dow, but not nearly as much so on a percentage basis. Before we get started, I do want to just run through the agenda. First, we're going to go through the daily market recap, talking technically, chart lists, candlesticks, earnings spotlight, and the three you must see. Before we get into any of that, though, let me take you over to earningsbeats.com. For those of you that are new, we'd love to have you join our free Earnings Beats Digest newsletter. It is published Mondays, Wednesdays, and Fridays in the morning, typically before the market opens. All you have to do is type in your name, email address there, hit the subscribe button. We'll get you set up. We do feature earnings, relative strength, those types of things that are important to us at Earnings Beats. I think it's very educational. It is completely free, no credit card required, and you may unsubscribe at any time. All right, let's get into the daily market recap. So on Wednesday, we saw the Dow Jones Industrial Average close back below 35,000. We were actually down 128 points back to 34,930. S&P 500 flat on the day, down less than 1 point, back to 4,400, and just a little change above that. The NASDAQ gained 102 points to close at 14,762. Not a record, but we have come up quite a bit off the lows that we saw on Tuesday. Mid caps and small caps both rose just a bit more, right around that 0.75% mark. The mid cap struggling to get back through its 50-day moving average. Small caps trying to get back through its 20-day moving average. So we have seen a little bit of relative weakness in both of those areas of the market. Energy was the big winner on Wednesday, gaining almost 1%, about 0.9%. Still working its way back, trying to get back up above that 20-day EMA. We'll see if we can get through. So far, though, we're definitely looking as though may have a little bit more work to do before we get through that 20-day. Communication services finished up about 0.75%, so it was a good day in that area. But we still, have a little bit more work to do as we've broken out recently with slightly lower PPO. So we want to see that momentum picking up and breaking to new highs on that PPO. In the meantime, staples, consumer staples, the worst performing sector on Wednesday, down almost 0.9%. We were working off our recent high up near 72, pulling back, but still above that rising 20-day EMA. So all's good still there. On the earnings front, the S&P 500 led by Advanced Micro Devices, AMD. So pretty volatile action, not just in AMD, but a number of companies that reported earnings. You can see AMD early in the session down testing its 20-day moving average in red territory, but by the close, it was up almost $7, 7.5%, and it was the best performing stock in the S&P 500 on Wednesday. Humana, on the other hand, has been trying to get through this 470 to 472 area. If you go back several months, you'll see that we've had some difficulties getting through there. Came up with earnings. They did beat, though only slightly. And I think that may have spooked some folks because Humana gapped down quite a bit at the open, was trading down further intraday, but did manage to come back up and close in the upper half of its candlestick. So all in all, not bad action once the gap down occurred. But still, Humana, worst performer in the S&P 500, also on the heels of its earnings. Let's move over to the 10-year Treasury yield. On Wednesday, we did get the FOMC interest rate decision and policy statement. There were no real surprises there. The Fed's going to continue to move very slowly in terms of even the discussion of raising rates. There was no interest rate change made, and I don't foresee one. The Fed doesn't foresee one for a long time. I don't believe we're going to see one probably until at least 2023. That's my opinion. We'll see what happens. Let's see. On Thursday, we're going to have the second quarter GDP out. First estimate, 8% is consensus. And there's a pretty wide range, anywhere from about 6.5% to the downside up to about 9.5% to the upside. Imagine that, GDP up near 10%. But we've talked about this on the show. This was coming. Last quarter, 6.4%. Don't be surprised if we beat that 8%. I wouldn't be surprised at all. Initial jobless claims due out in the morning. Last week, 419,000. We're expecting that to drop to 390,000. And then finally, June pending home sales. If you recall, May rose 8%, not 0.8%, but 8%. Huge move up in May's pending home sales. We're looking for a slight drop off in June with a decline roughly of about 0.8%. All right, looking at that 10-year Treasury yield, you can see that we were up 3 basis points on Wednesday, closed at 1.26%, but we continue to drift beneath this declining 20-day EMA. So until the yields can get back up through the 20-day, the path of least resistance is to the downside. All right, moving on, let's talk a little bit, talking technically. I wanted to show you this chart on the NASDAQ. I thought this was kind of interesting. I was just looking for the channel, looking back over the last few years, seeing, okay, where would I draw the channel? And I think first thing I would do is probably ignore the, pandemic-related drop in February and March. The market, went down initially, but came roaring right back. What I would do is maybe focus, oops, wrong one there. I think I would focus on something like this. And what I've done is I've connected a few different points. I didn't connect the low back in at the end of 2018, which was that trade war related low. But I did connect the low in October, and it also connects these two lows. And if I grab that line and drag it to the top here, you'll see that the tops back in 2019, this top here, nearly touches the top that we saw in February before we had the a little bit of a pullback earlier here in 2021. But I think this, for the most part, captures the channel that we've been in if we just ignore what happened during the pandemic. And what I find really interesting at this point is that we're kind of sitting right now in the middle of the channel. We're not at the upper end of it, and we're also not at the bottom of it, but sitting in the middle. So I think there's room to the upside here, looking at this particular channel, again, going back to the end of 2018. So just wanted to point that out. A couple of other charts I wanted to show you, and these are all industry groups within the consumer discretionary area. The first is gambling, and I wrote about this in the daily market report earlier today and sent out to members. But you can see this 750 area. See how we had some resistance back in 2020, and then we finally broke above it. And then when we've gone back down, we've been testing the 750 level. So broken resistance becomes support. And that's, just basic TA 101. And it's been holding. So this is an area that I would watch for here on the gambling stocks. Then we can go to hotels. And when we look at the hotels, recently, you can see the pullback to about 2250. That's where we broke out from. So I think hotels continue to sideways consolidate. We've been moving up the last week and a half to 2 weeks. Don't know if this is the start of a trend, but if it is, we should hold that rising 20-day moving average on any pullback. That 20-day has started to turn back up again. So that'll be interesting to watch on the hotel index. And then we've got the furnishings. And furnishings I wanted to annotate because I'm seeing a bullish wedge. And so if I take it from this high right here, and come down. And then over here, connect these lows. You can kind of see the squeezing, and it's almost like a piece of pie. And that's what a bullish wedge is, off of an uptrend. So here was your trend to the upside. I think that's pretty clear. And now we've been going through this lengthy period of consolidation in a bullish wedge. Now, in order to break out here, I think we need to take out this recent high, which also would be this downtrend line. So I'm thinking that 480 area is a level that I'd be watching pretty closely on the furnishings index. Let's move on to home builders. We've had low interest rates. And overall, I think this has been a pretty, nice looking chart. I mean, we had a nice uptrend. We pulled back, went back down, put in a slightly lower low, but we've been holding this low around 1400. And notice all the tops coming in here at about 1530, 1540. So we've got to break out of this range, and it would be much more bullish if we break out to the upside, because then off of this uptrend, I could actually see a cup forming. Kind of got this rounded bottom look already, starting to turn back up. So if we get through about 1530, 1540, that would begin to bode well for a move back up to test that 1650 high. And as long as rates stay low, you would think home builders would benefit from that. All right, last one I wanted to show you. This is one of the hottest groups of late. This is the restaurants and bars area. Not too many areas have been stronger, especially in the discretionary area. But we had broken out in July, pulled back one more time, and then really took off. And we've seen a number of companies do very well in this space. We saw Chipotle breaking out, having a huge last month or so. We've also seen Starbucks break out, pull back with its earnings yesterday. And same goes with McDonald's breaking out and then pulling back with earnings. But all these companies definitely are trending higher. And I think this bodes well for this industry group as well as we go forward. All right, that's it for talking technically. Let's move on to chart lists. And for chart lists, what I wanted to do is, let's go back out of here. I ran a scan against 3 of our chart lists at Earnings Beats. If you're not familiar with what we do at Earnings Beats, I essentially view our service as a research and education platform. And so we do a lot of research for our members and provide scans and so forth that can be used against our chart list, where we organize a lot of our research. And so 3 of our chart lists are our strong earnings chart list, which incorporates companies that have beaten both revenue and earnings estimates, as well as, look decent technically and are liquid. So those are some of the filters that we use. But just about any point in time, we have anywhere from about 300 to 600 companies on that particular chart list. And then we have a second chart list, which is our strong future earnings chart list, which essentially is just looking at companies that have strong relative strength, have been performing well, but are not on our strong earnings chart list for whatever reason. It could be that earnings are getting ready to come up and they may have beaten last quarter, but we take them off of our strong earnings chart list when they get ready to report again. And then, of course, the only way back on the strong earnings chart list is to beat revenue and earnings estimates. Got to start there. So anything that has a fairly strong scooter score and is not on our strong earnings chart list generally will be on our strong future earnings chart list. So that's our second chart list. And then the third one that I mentioned that I used in the scan was our raised guidance chart list. So any company that raises its guidance is also included on that separate chart list. So I looked at these 3 chart lists and wanted to find any companies that had put in lower highs for 5 consecutive days. And then today, Wednesday, actually put in a higher high for the first time. So in other words, it's kind of breaking this downtrend. And when I ran that scan against all 3 of those chart lists, these were the 3 stocks that came up. So Cornerstone On Demand, notice they're all 3 in technology. Cornerstone On Demand, Model N, and Qualys. 2 software stocks, 1 in computer services. So let's go ahead and take a look at these 3 stocks and just see kind of, do they make sense, or, should we be interested in these stocks? First one, CSOD. Well, you can see first by just looking at the chart that there have been at least 5 days in a row of lower highs. And I'm going to shorten this chart. Just go 3 months here, just so you can kind of see the pattern. So here, back on July 20th, we had this high. And then 1, 2, 3, 4, 5 days in a row, we had lower highs. And then today, we actually put in a higher high, reversing candle. Now, we got work to do here on this chart. We still got to get back through a couple moving averages, but we did come back down and get close to the breakout area from early June when the volume spiked and we went back up above those prior highs. So, this could be an area where we see a move. I think we're in a sideways consolidation period. Here's a high. And then if you go to that prior low, notice we've been holding that. So I think 41 to the downside, 55 to the upside, and we're sitting at 48 right in the middle. So this chart, while it is nice to see a reversal, I'm not sure I see enough information on this daily chart where I would want to be in. I do like the AD line, which is strong here. And maybe I would look at the weekly chart, just see if there's something on the weekly chart. Well, we got a 20-week test. So that is a little bit more encouraging. I think what I would do is if I did go in on the long side here, based on that reversal on Wednesday, I'd keep a fairly tight stop. Anything below this week's low obviously is breaking back down below that 20-week EMA. So that would be a problem for me. Otherwise, this seems to be a pretty good area for the stock to reverse on that weekly chart. Next up is MODN. This is Model N. And this one, after putting in a hammer right at this support area, 31.32, if you go back, low at 32, low at 32, low at 31 and change, 31 and change, 31, a lot of action here. And then this one low down at 29. But 31 to 32 has been a pretty good area, and we just reversed off of that. So MODN, I think, looks kind of interesting at this level as well. I'm going to pull up a weekly chart here just to see if there's anything. No, again, the weekly chart just showing you what you already saw on the daily chart. A lot of support in this 31, 32 area. All right, the third one that I wanted to show you from these chart lists is Qualis. And Qualis came down and looked like it was breaking down below the low from a couple of weeks ago, but then reversed off of it. And after putting in 5 consecutive lower highs, we now put in a higher high. So it does look like, at least in the short term, we're reversing. But when you look out more intermediate term, I'm not seeing any kind of a trend here. I really just see a lot of sideways consolidation. 92 or so support, 108, 109 resistance to the upside. And once again, we're sitting right in the middle of the range right now at 100.9. So while this is a very interesting scan that I like to run, I'm not seeing anything that looks superb here. Maybe CSOD of these 3 perhaps looks best to me based on a possible reversal. And that goes back to that weekly chart. I like what's going on in the weekly chart. All right, let's move on and talk a little bit about candlesticks. So I wanted to pull up 3 charts where we've seen some pretty nice hammers print. And if you're not familiar with a hammer, essentially what it is, the candlestick looks a little bit like a hammer, that you would use, the tool, where you've got the long handle and then you've got the big head at the end. So a hammer requires an intraday move to the downside with a reversal. So you open and close near the top of the candle, but intraday, it looked like, things were pretty bad before reversal. And the thing that I like about this one, now this is a stock, by the way, when you look at the volume, this is probably not a stock that I would trade personally, and not one that I normally would mention to members, because if you look, there are a number of days where the volume is under 100,000 shares. And to me, I just like to see more volume. But we're only looking at the candles here. I'm not really worried too much about the volume on this particular stock. What I wanted to do, though, is to show you that if you look back to this candle right here, where we closed right at about 1160, 1170, notice we've gone right back down to that level, tested it multiple occasions. And then we actually looked like we were breaking down on Wednesday, intraday, on very heavy volume, and came back up and closed near the high. So it was still a down day, but it beat the heck out of the alternative of closing down near that intraday low. That would have been a pretty substantial breakdown on heavy volume. So at least the reversal gives the bulls some hope here on KVHI. And a hammer off of a downtrend is usually a good signal for a reversal. That's why I use hammers. Here, KVHI, you can see the downtrend several days in a row, and then we put in a hammer at support. So I would expect short-term move back to the upside. We'll see. All right, next up, IVZ. This is Invesco Limited. It's another one. Actually, we've had some pretty good support right around this 24 area. So if I was annotating here, AD line very strong too on this one. I'll show you that in just a second. But you can see the low here back on July 19th. We went back up a couple of dollars, worked our way all the way back down. Volume's been heavy the last 2 days, but we've had tails down below support, coming back up and closing above it off of a downtrend. AD line's been very strong, and this heavy volume and reversals, that's helping the AD line. It's actually starting to turn back to the upside. So IVZ is one that I'd be looking for a reversal short term as well. And then IMAX. Of course, this doesn't guarantee anything, and hammers fail just like anything else in technical analysis. So there's no guarantees. Just make sure you keep your stop in play in the event that the stocks do move lower and take out those recent lows. IMAX, off of a big downtrend, got a little bounce, went back down. It looked like we were breaking down early today, and then came back up, closing with that hammer. And this is another one. If we pull up the support area, which is right here, 16 top, 16 top. You can see a little cup handle breakout. Went well past the measurement. Here you can see the measurement down to, almost 10 from 16. So that would be 22, $6 top to bottom. So you break out, you add $6 to 16, you get to 22. And right here, we actually went up slightly above 22 and then put in that island cluster reversal. And since then, we've been struggling, moving all the way back down to this breakout level. But $16 has been a pretty good area of support. So I like that hammer that printed on the key support level. We'll see whether or not that holds as we go further into the week. All right, let's take a look at earnings spotlight. So after the bell, I actually looked at 40 companies. These are 40 of the larger cap companies. And I added up their actual earnings for the quarter. And then I added up their estimates for the quarter. There were 38 companies to be exact. And the 38 companies I looked at, the total earnings came in at $84.75. Market expecting $71.55 on those 38 companies. And I just bring this up because, again, a lot of discussions right now about price earnings ratios being too high. You've got to consider the fact that estimates are going to be raised. Looking at these beats that we're getting this quarter, out of the 38 companies I looked at, 4 missed earnings estimates, 4 out of 38. And I think 2 matched. Yeah, 2 matched. So 32 out of 38 beat estimates. And some of them beat by a mile. Facebook came in after hours. Let me switch over and let's take a look at the chart here. So Facebook comes in after hours, posts their earnings, $3.61. The estimate, $3.03. I mean, that's a 20% beat on the bottom line. Now, there were a lot of folks spooked by Facebook because Facebook did say that their growth would be slowing as we move forward. But I think you can expect that with a lot of companies because as we've worked through the pandemic and all of this demand now that's suddenly come in, we're not going to sustain that. So I think as we go forward, comps, when you look back to this quarter, are not going to look as good, or if they're not going to be beating by as much. And I don't think you'll see the same kind of growth rates. So I don't think this is anything that's, huge news. I think this is to be expected. Companies are not going to keep blowing away earnings estimates like this, like Facebook did. So yeah, I mean, I think it makes sense that, we're going to have some growing pains, and we're not going to have the growth that we expected. But after hours, Facebook was down about 3.5%. So we're talking $10, $12, something like that. Nothing earth shattering, but at the same time, it is still worth noting that Facebook down. I would be looking back somewhere in this gap support, 350 to 360. I think Facebook will probably find buyers. It may be right at the opening bell on Thursday, but things do look like they'll get off to a rough start. And honestly, some of the worst reactions to earnings were some of the biggest companies. So Facebook, another one was PayPal. So PayPal, great company. Look at this AD line. It's been awesome. We're right back up to this 310 level. It reminds me a little bit of Humana, right up trying to get the breakout, and then comes up with earnings. And PayPal did beat. It was a slight beat, 115 versus 113, but stock down 5.3% after hours. So it's going to be roughly $15, maybe a little more. So that's going to take the stock back down close to its 50-day moving average. I suspect anything back down around the 280 level, if we get down that far, I think will attract a number of buyers. Another big company that was down after hours was Lam Research in the semi space. Now, Lam has been going sideways for quite a while. So I would be viewing the stock as having resistance at 675 and support down probably at 550. Now, you got equal highs and so far rising lows. But with this 3% moved lower, that's going to be about close to $20. So we may be down to about 615. Still a lot of room to the downside before we get to any key support levels. I would say 575 and then maybe closer to 550. Those are the two levels really that you want to pay attention to. All right, so those were some of the big ones after hours. Did get a decent reaction to Ford, which showed a profit 13 cents versus the expected loss of 11 cents. But once these earnings come out, I'm going to finish with this 3 you must see. I just want you to see how volatile some of these companies can be after earnings come out. So Generac, this is one of our portfolio stocks at Earnings Beats. Stock was down at one point to $383. And this was from $439. So it was down $56. Came roaring back and actually got back to even before finishing down slightly. Very volatile. How about SWK? This is Stanley Black & Decker. Gaps up and then sells off. So it opens higher and then comes back down. And the last one I wanted to show you is Enphase, ENPH. It was down $10 early in the day, came back, finished up $8. All within a trading range. So this is what you have to deal with when these earnings are coming out. Got to be ready for the volatility. All right, that's it for me. Appreciate everybody tuning in. Be back on Monday for your next Trading Places Live. That'll be at 9 a.m. Eastern. Hopefully, everybody has a great rest of your week. Enjoy your weekend, and please tune in on Monday over at Earnings Beats. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.